Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Markets in Asia Pacific were mixed after Wall Street's 4-day losing streak ended. Global bonds rose after the Bank of Japan increased its yield curve tolerance. European market rose. The Stoxx 600 index rose by 0.85%, with U.S. futures only slightly changing. Today's U.S. dollar index is in a tepid position. On Wednesday, the yen was at a 4-month high in relation to the dollar as traders assessed the shock move of the Bank of Japan. The gold prices fell from the 1-week high reached in the previous session to a lower level on Wednesday. Oil prices were not affected by a greater than expected draw of crude oil stocks in the United States. This was in spite of concerns about rising COVID-19 cases among top oil importer China. Asian Pacific market. Japan's second day of losses continued with the Nikkei 225 falling 0.68%. The Japanese yen is at its strongest point in over 4 months. After the Bank of Japan announced that it would increase its yield curve control range, the yen strengthened even more overnight. As Penny Wang, Australia's foreign minister, is due to meet with Wang Yi, China's counterpart, in Beijing on March 22, the ASX 200 rose by 1.29%. The Aussie remains in the resistance zone of 0.6675 against greenback. Market of Europe. GfK's consumer climate indicator in Germany rose slightly to -37.8 in January 2023, from a revised -40.1 in December. This compares with market expectations of 38.0. This was the third consecutive month of improved sentiment amid government energy measures. The largest jump in income expectations, followed by economic conditions, marked the highest reading. The euro hovers within yesterday's range. Sterling fell against the euro and dollar on Wednesday as British public borrowing reached a record November level. This underscores the economic challenges facing the UK. Last week, the pound fell 0.3% to $1.21515 and 0.4% to 0.87 pence against the euro. Market of America. According to the Equipment Leasing and Finance Association U.S., companies borrowed 9.9% more in November to finance equipment investments compared with a year ago. Last month, $8.6 billion was borrowed by companies to finance new loans, leases, and credit lines. This compares with $7.9 billion in the previous year. The January borrowings increased by nearly 6%. Canadian retail sales increased by 1.4% in October compared to September, according to data on Tuesday. However, an estimate for November shows a 0.5% monthly drop heading into Christmas shopping season. This is after 7 interest rate rises this year. Although the greenback is in a hovering mode, it is still within the local downtrend towards support at 1.3580 to around 1.5522 against the Canadian dollars. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.